brought to you by Merchant Waste. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant Waste. Finance, invest, insure.
Welcome to Stock Watch with me, Zinati Guma, and join me to unpack your stock-related questions tonight are Ricus Reeders from PSG Hole in one Ruimsig and Nader from Benguela Global Fund Managers. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag StockWatch. Thank you so much for your time, gents. I'm wondering, what did we do for us to end up here at work the day after a public holiday? But anyway, we are here. We must work for our money. And we came back to comments that Paul said that asset prices, equities are looking frothy. Ricus, I mean, this is a narrative that has been around for a while. So I actually just want to start off with, I mean, what do you think? Because we've seen the markets now pulling back, and I'm wondering how much longer can this go? What's the impact of this realization?
Yeah, well, it can go on for a lot longer as far as the upside is concerned. So we are at high valuations historically. But if you take a look at the data that came out, for example, just today out of the US, and really we are talking about the US market if we're talking about frothy.
Yeah.
That data is looking great. GDP was revised upwards. We don't seem to have a real problem as far as labor is concerned. There's a bit of life in the property market. So the background to the market is looking okay. And also remember the frothiness, I think, is concentrated mostly in the tech and AI sector, where one can make the argument that valuations are high and people are comparing it to the dot-com era. But where it differs from the dot-com era is that we are sitting with probably the best companies in the world using cash to do investments in what they see are the future. So I'm not going to stand in front of that locomotive and call it top or anything like that. So be cautious, but that doesn't, just because things are high doesn't mean they can't go higher.
Yeah, and it's actually quite interesting because there have been lots of articles coming out with market participants expressing concern over an AI bubble. But I actually had someone earlier on that I was interviewing this week that was like, I mean, is it a bubble, considering the fact that this AI theme is not a fad, it's a long-term trend? Grant, yeah, what do you make of that kind of frothiness that we are seeing? And if, yeah, does it seem like the bubble could significantly break? Is it a bubble?
Yeah, I mean, look, that's $1 million question. It does rhyme with bubble in some parts of the market, when you see, some of the movements in the quantum stocks, some of the like CoreWeave, the data center stuff, when they make one announcement and the stock, goes up 30 or 40% at a time, it's definitely a note of caution. Just says, I don't think the long-term structural build-out is a bubble. I think this thing is real, and I think the world is going to change with it. But that doesn't mean that stocks can't get overexcited along the way and have their pullback. I don't think it's going to evaporate like it did in the tech in the internet bubble, because there, a lot of that froth, there wasn't any earnings there. Like as Ricus said, these companies that are actually driving this growth are actually the best businesses in the world, and it's funded almost entirely out of free cash flow. So there's something real there, but don't be fooled and think that it's just plain sailing and it's a straight line. I mean, this 3-day pullback, now we're all questioning, is the market pulling back or whatever? If you just zoom out, the markets have done, this is not even a pullback. This isn't even a correction is 10%. We haven't even done 3%. So I think we're still within a few percent of all-time highs, and probably across most global markets. So, first of all, I wouldn't see this as any kind of real wobble. It's way too small to even register on the radar if you zoom out for more than a day or two. But I do think pay attention to what your entry levels are, pay attention to what you're buying, and just always have your risk management sort of hat on, because this can go on a lot longer, but it can also shake you out along the way. And don't buy something now, and then the market has a 10% pullback and you want to sell.
Yeah.
You buy it now, then you must be willing to hold it. Otherwise, you are chasing momentum, and then you need to be careful.
Yeah, and yeah, quite interesting that you highlight, I mean, this longer term structural trend, but at the same time, there will be these short term movements to the upside or to the downside. Ricus, a specific question, Nasdaq versus S&P 500, with tech having climbed this year, what is the forward outlook? Is there more room for growth? And by how much more? Well, I don't think you can tell us by how much more, but just talk to us about the potential for more juice coming into the Nasdaq and S&P 500.
Yeah, as you said, I can't give you an end price, but I can almost guarantee you we are going to see a 10-15% correction somewhere within the next 12 months, because that's what markets do. And it will probably be concentrated in tech, because that's where the expensive bit is. But without having sort of specific, this is what I'm going to make percentage target, or this is what's going to go down. As Grant has said, the market driven by American tech companies, who are the best of the bunch, that there's a good underpin, both, as I've said, from the specific companies and from the US economy. And with the US economy, I mean the consumer, or at least the consumer who has money in the bank, who's got an equity portfolio, who's not looking to buy a house. In other words, your wealth consumer is looking pretty good. If you don't fall into that category, if you're looking for a house, if you're paying off student debt, if you've got credit card debt, you are in trouble. But that's not where the money is made as far as your company is concerned. You know, there's a difference between what happens on Wall Street and what happens on Main Street, as they say.
Yeah. Okay. It's quite interesting also, Grant, because this week I've had at least 2 people picking Microsoft as their stock picks. And I'm wondering if, you know, certain companies stand out in terms of the structural trend that we are seeing, that, you know, even though we may see a kind of correction, that you'll still be safe in those companies in that AI tech space.
Yeah, look, I think Microsoft is one of the best positioned to capitalize on this opportunity. They ran hard for a while, and then they've actually gone nowhere for a few months now. I think other stocks have run far ahead of them. So, and it's one of the safest houses in the block. So yes, I think you could buy a Microsoft. I think you could. I think Google is still, on a relative basis, is a bit cheaper than some of these others.
Okay.
And actually, they could emerge to be the winner, given their if you look at the composite of what they offer, and they are getting stronger. I think there was a lot of question marks about them a few months ago only, about whether ChatGPT was going to disrupt and derail them. I think they're starting to put some of those question marks to bed. They're starting to position better through Gemini, and I think they could be a surprise package. Meta's another one that I think is well positioned to deliver. Apple is incredibly well positioned, but they're doing nothing. So I don't know if Apple gets it right. There's a lot of opportunity there, but it's not clear that they'll get it right. So I don't have a strong view on that one. And then, some of the smaller stuff is getting very racy. So I like these big guys with a lot of cash flow, like an Amazon as well. They've got all the cash to spend the money, and they've got the right consumer base to deploy it into. The one other stock I would consider that I don't think gets talked about enough is Uber. I think they are incredibly well positioned to tap the AI opportunity through that rich data set, through the monetizing it, through advertising, through this large platform economy that they've built, and across a number of pillars. So those are some of the names that I like.
Okay.
But I think look for the very strong free cash flow, because that's where you can be defensive even if things wobble. Your company's never going to roll over.
Yeah. Okay. A very interesting question came through. There's a viewer who's made a lot of money since COVID in March 2021. with a fair amount of buying and selling. Today, I'm up 64% in the US, 22% in the EU, and 5% on cryptocurrency. Should I stick to my guns or make a strategic change? Ricus.
Well, that really depends on how he got to where he is now. If that was based on a good investment strategy, then you don't change your strategy if it's winning. If it's pure luck, then it doesn't really matter what you do because you'll just be depending on luck. So, as with any, I think, serious investors, and a serious investor can be a trader as well, but it starts off with a plan, and if the plan works, why change it? So that's a question he's got to answer himself, and honestly, no, he's got to ask himself, was this luck, or was this what I thought was going to happen? If it's what he thought was going to happen, then obviously his methodology and his logic is working with him.
That's actually very interesting. Yeah, very interesting way to look at it. Your thoughts on that, Grant, if he should carry on with this momentum and really what got him here, or maybe just do a few changes there?
I think the first question I would ask is, what's your time horizon? So
Okay.
if you're investing, if you're about to sell out the moment there's a pullback, then just start monetizing some of your returns and have a plan. But if you're in it if you're still retiring in 10, 15, 20 years time, stay invested. Just make sure your balance across the, is so 66% in the US. That's roughly the US's weight in the global benchmark anyway. So it's not an inappropriate weight. And given that it represents that in the global economy, etc. So, well, it doesn't represent that, but in the markets it does. Just find just make sure there's nothing overly skewed in your portfolio, that you're not massively over or underweight something that's going to make you uncomfortable. And if you have a long-term view, I would stay invested because you're invested in, the best economy in the world predominantly. And Europe, I think, is seeing something of a revival. They are getting rate cuts. They are trying to wake up, spend a bit more on defense, spend a bit more on infrastructure. They're way behind the AI curve. Things don't have to get a lot better there for there to be an improvement. So, it's not bad to have some eggs in that basket. Maybe consider something in Asia. China or Southeast Asia looks still cheap. So I think there's a lot of opportunity, but it doesn't sound like you're doing anything reckless at the moment.
Yeah, and I mean, the viewer seems very, very active as he's talking about buying and selling at the same time. So he's not just putting his money in there and just letting it sit. Grant, we did have a question on a viewer who's made quite a lot of money before we went on the break. There was something you wanted to add?
The global holdings, that I was just going to say to everybody, in fact, don't confuse bull market with genius, as they say. I survived the GFC, and there was a lot of genius around until that unraveled. So just make sure you just objective in your positioning and your sizing and your trading expertise is what I would add.
Okay, all right. Thanks for that, Nugget, Grant. I want to move on to another question that's actually quite interesting. So glad there is not much noise around 24-hour trading on the JSE. But whenever there is a holiday, our market is closed, but the mighty Rand trades, leaving us to play catch-up the next day. As most of our shares, including the platinum stocks, are influenced by it, should it not be considered, Grant?
I think it would be great for traders. I mean, if you think about cryptos, people trade 24/7. It's just part of the norm for the young generation. And I actually think that's where we're going as we eventually move to tokenized equities. The Nasdaq put out a paper recently that's what they're planning on rolling out next year. So if that comes, and I think it will down the line, you'll have that. But it's not yet realistic here because you've got issues, I think, around settlement, custody, liquidity, and all those sort of things. But it probably comes. So I wouldn't be surprised to see one of these crypto exchanges or the JSE ultimately go 24/7, tokenized blockchain-based trading.
Yeah, your thoughts on 24-hour trading on the JSE, Ricus? Would you not have sleepless nights?
As Grant has said, it is coming. There's, the There's nothing wrong with the idea. It's the technicalities that's got to be worked out. As I said, settlement,
Yeah.
when do things get fixed, no prices, that kind of thing. But yeah, if I were a day-night trader, then I would have sleepless nights. But not. But fortunately, my time horizon is a little bit longer than 24 hours. So I would welcome it because um, more, a 24-hour trading cycle just gives you more data to work with. In other
Okay.
words, there's more price discovery. So as the viewers said, it will take away the catch-up we have to do when we've got a public holiday, or that Japan has got to do. They had a public holiday on Monday. So it affects not only the JSE, but every single stock exchange worldwide where there might be a banking holiday or whatever. So yeah,
Okay.
more data, more to work with, and I'm all for it.
Okay. Well, let's get into other questions. Your view on the following shares at current value, starting off with Aspen. We know that that is one that was beaten up quite a lot by the markets due to a contractual dispute. They came out with their results, but I don't actually think that it's moved a lot since then. Yeah, in fact, it's actually been continuing on its downward trend. It's down 5% today. Grant, Aspen?
Yeah, I don't think Aspen is down today on its own unique story. I think there's a broad-based selling in SA.
Okay.
But what I will say about Aspen is, having been out of it for a while, I think the risk reward here looks quite interesting. So it's not without its risks, but if they do a deal, if they fill some of that capacity that they're sitting with, that 2 billion EBITDA contract that they lost, I mean, that capacity is now sitting empty. If they come through with a deal, there's decent upside, significant upside to be realized quite quickly, at least in the share price. The risk is obviously that they don't, but I think the sort of core business, what's left of the business, is reasonably well priced here. It's fairly cheap. I've seen some research suggesting it's around 8.5 times earnings, roughly half of other peers in a similar space. So, if you're a little bit speculative, I think the risk reward does look interesting here.
Okay. Yeah, quite interesting. Do you think it's cheap enough for one to get into at this point, Ricus, or is the narrative that it's cheap for a reason, so maybe you should stay away?
Well, as Grant said, it's not only Aspen that's getting affected today, it's health shares worldwide, because Trump has just announced basically looking at drugs and medical technology and machinery imports into the US, and whether he's going to slap tariffs on it or not. So your health sector is the worst performing sector on the S&P this evening, as it was in Europe. And then Aspen has got its own problems. I said on the program, I don't want Aspen's price to move below 100 Rand. That's just not a technical looking at a graph level. It has. So again, on that basis, downside short term to about 82 Rand 50. Not interested while the price is doing the kind of downward move and momentum that it has. It might, at some price, some prices might offer value, but I don't want to catch this falling knife.
Yeah. Yeah, and talking about downward movements, we're also seeing that with Mondi. Looking at this chart, I don't know if it maybe has found a kind of support level. Grant, what do you make of Mondi at this stage?
No, I'll be honest, I got this one wrong. I thought it offered value a while ago, and it does keep drifting. I think the European economy is very slow to recover on a consumption level. And even though I talked about some of the improvements there earlier, that's more, on the industrial side of things, and it's more at the margin, and it's not yet feeding through into the consumer. And so, and it's also a fiercely competitive space they're operating in. I like the management. I think the stock is attractive, but sometimes with these cyclicals, the cycles don't turn for a lot longer than you anticipate. So it's one to be patient with if you do want to own it. Alternatively, you can wait for that, the green shoots to emerge in that paper and packaging space, and then you could jump in. So yeah, I like the company. I'm just not sure about the timing. That's the bottom line.
Yeah, because it seems that it just has been on the cycle, this downward cycle for a long time. Ricus?
Yeah, it's the same. I mean, it's the environment it plays in is not conducive to the share price. So again, just looking at technicals,
Yeah.
probably downside to about 220 short term.
Yeah.
But it's breaking low. It's sitting on a historic price earnings of 22. That's high. It's a great company, far better quality than Aspen, I think. But unfortunately, both of those counters are in downtrends, and it's confirming lower lows. So I'm just following the price down before doing anything about it. I'm not investing in it.
Okay, all right. Well, let's take a look at Mr. Price. We know that this is a firm favorite in the retail space, but if I'm correct, the retail space also just has not been doing well lately. Yeah, Grant, is Mr. Price, because it's obviously seen as, high quality, is this one of those where when there's a dip, you just get in, or yeah, how's it looking?
Yeah, I do find it attractive at these levels. The valuation is attractive. Of course, what is the outlook in SA? Because they're not going to succeed without an improving SA economy. They have some tailwinds. The rand petrol price is remaining low. There's real wage increases. Inflation is behaving. Two pots fading a little bit, but there's some GNU impetus coming through, etc. So at the margin, I think things are improving. Typically, you would see that benefit flow through into the discretionary retail like Mr. Price. So I think they're okay. They are obviously a great cash operator for the most part. So one of the better businesses out there, good quality business. I think you can buy it. Again, I'm not sure about the timing, but I really do think things are going to be better in SA over the next 12 to 18 months. And this is the kind of space where you'd want to play if you were going to tap that opportunity in SA. So yeah, I like Mr. Price at these levels.
Yeah, okay.
And I would be adding here.
And it's quite interesting because I think less than a year ago, Mr. Price was seen as rather frothy. Looking at where it's standing right now, Ricus, would you think that it's attractive?
Well, it's better looking than it was when it was trading at 320. It's now at 220. Again, I don't want the price to go below 200 because then technically it will look pretty dim. There's been a little bit of an uptick in retailers over the past few weeks, up until about Tuesday when our consumer confidence numbers came out, and that looked pretty awful. So that two-pot thing is working out of the way. There's no real impetus in spend yet, although things might look better depending on where interest rates go, GNU go. So to me, it's going sideways at the moment. It's not cheap, it's not expensive if you're taking a look at your historic price earnings, but it's a great operator, it's a good cash operator. It's not my favorite in that sector. Pepco is still, I think, the more interesting one, but given the right conditions, and if you're prepared to wait and you don't mind further downside, possibly, if sentiment worsens, then you won't be paying up for Mr. Price if you're buying at the moment. Just from my own perspective, it just looks like it's going sideways, and I'm I don't think anybody wants to be in something that's just going sideways.
Okay. Well, Grant, what are you paying up for today? Your stock pick?
I am paying up for something that has moved, admittedly, but I think another structural long-term trend is in place in copper, and my pick of the day is Anglo-American. I think the story's still got a long way to go before it's unfolded. We saw the supply disruption that is going to be a number of years, 2027 before its full restoration from Freeport McMoran's mine that flooded. And I think Anglo's is positioning themselves incredibly well for this commodity for all seasons. Really, they are deeply integral to new technology, EVs, smartphones, infrastructure, AI data center build out, energy transmission for the AI data centers. So copper is just everywhere, and AI is becoming more and more a copper play and less everything else play. So a little bit of iron ore will still be there, but nothing else. And So I like it. I think there's a long road to run in the space. I have picked Anglo's, I don't know, a while. It's been a while, but I think it's looking solid, and yeah, I like Anglo's. That's my pick.
Okay, Ricus, what are you finding attractive today?
Well, it was almost Grant's pick, Anglos. I agree with him, by the way, that Indonesian copper mine, that's 3% of world production out for a very long time, if they can reopen that again. It's a weird mine that they're mining a mountain and it's basically caved it. Anyway, but my stock pick is L3 Harris Technology. It's a defense stock based in the US. I would normally go for General Electric, aerospace, but they're a bit expensive. This is my second choice. What I like about them, they are in the right sectors, whether it be electronic warfare, radio telecommunications, a little bit of rocketry in the form of missiles. So it's not big systems, but systems that everybody needs, and specifically the Europeans can buy and use. It's not a F-35 fighter aircraft that's really not built for the European theory or theatre. It's products that the Europeans can buy right now and apply as far as their defence spending is concerned.
All right. Well, thank you so much, gents, for that very, very insightful analysis. Really appreciate your time today. That is all for tonight's Stock Watch. Thanks to our guests, Ricus Reeders from PSG Hole in Ruimsig and Grant Nader from Benguela Global Fund Managers. Up next, the close day watching.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.